Hello, this is Addis Fortune with the week's biggest business stories. Headlines include a tooth extraction for growth with the IMF as dentist, Fed rolls out red carpet for real estate titans, NIB Bank sails through stormy governance, Biscuit manufacturer faces uphill tax battle amidst production halt, and ministry extends Lifeline to struggling edible oil producers. In his last week's address to Parliament, Prime Minister Abiy Ahmed painted a picture of an economy poised for transformative reforms, but not without the requisite pain such shifts entail. He forecasted a robust 7.9% gross domestic product growth for the year, despite the country grappling with 28% inflation in December. The Prime Minister used a metaphor of tooth extraction, indicating the immediate discomfort of reforms for long-term health. The National Bank of Ethiopia unveiled a 3-year strategic plan to address weaknesses in monetary policy and exchange rate management. Goals include revising the Foreign Exchange Reserve Management Guideline and shifting towards a price-based monetary policy system. The central bank emphasized discretion in public comments to avoid speculation, and details about the restitution of the Monetary Policy Committee remain pending. Ethiopia's foreign currency reserve currently falls short of the optimal 3-month import coverage. The country earned $24 billion in foreign currency in the previous year, with contributions from services, remittances, and foreign direct investment. A deficit of $63.6 million was recorded in the balance of payments during the fourth quarter of 2022-23. Economists suggested that a committed improvement in capital and labor productivity could enhance the balance of payments. He observed a de facto floating foreign currency market where most commodities are imported at nearly double the official exchange rates. The federal government, alongside private sector players, is initiating a pilot project to construct 3,600 housing units through public-private partnerships route. The project aims to provide homes for employees of the state-owned broadcaster and the Federal Housing Corporation, signaling a shift in the country's housing development strategy. Interested companies must demonstrate assets of at least $45 million to qualify for participation, reflecting the government's emphasis on financially robust partners capable of substantial investment and long-term commitment. The Ministry of Finance, which floated the request for qualification bid a month ago, has already received interest from 23 real estate and construction companies, with more expected as the application window remains open. The initiative represents a departure from traditional public sector-led housing models to a joint venture approach leveraging private sector capital. A comprehensive governance structure featuring an 11-member board chaired by Finance Minister Ahmed Shide includes representatives from various government sectors to address housing challenges collaboratively. The project emphasizes risk-sharing guarantees, tax incentives, and assurances against potential price fluctuations and foreign currency issues, elements not explored in previous housing projects. Concerns have been raised by local companies over high entry barriers, with some expressing reservations about potential exclusion due to stringent asset requirements. Stay tuned. We will be back after the ad. We are back with more highlights. In the face of formidable governance challenges and liquidity constraints, NIB International Bank has posted a net profit of 1.51 billion birr in its operations for the fiscal year 2021-2022, a 12.7% growth from the previous year. Despite facing governance challenges and liquidity constraints, the bank has maintained a strong presence in the industry with a capital adequacy ratio of 15.7%, almost double the regulatory requirement. The departure of the former board chairman Woldetsene Woldegiorgis led to a period of transition, with National Bank of Ethiopia officials overseeing the election of new board members due to governance violations. Shisema Shawanika was elected as the new board chairman. Despite these challenges, NIB Bank's performance has been commendable, with growth rates and profit margins nearly doubling those of some peers. However, there is concern about the steady decline in earnings per share and dissatisfaction among shareholders on NIB's dividend policy and governance issues. The bank's earnings per share is below the industry average, suggesting room for improvement in profitability. The bank's operational expenses, including wages and benefits, have increased significantly, outpacing some peers. Financial analysts attribute NIB Bank's profit performance to a surge in interest income, tempered by rising expenses and the impacts of capital injections on earnings per share. The bank reported a 30.2% increase in interest income, but a decline in income from commissions and fees. The once vibrant operations of Ahaduk's Food Products plc, a manufacturer of Tiger biscuits, ceased operations a month ago due to tax disputes, highlighting challenges in Ethiopia's manufacturing sector. Established in 2015 as a joint venture between Ahadu plc and the London-based Vasari Group, the company faced hurdles in international market penetration, including security issues, supply chain bottlenecks, forex shortages, and input shortages. The final blow came with power cuts due to unpaid bills, leading to the closure of operations. The company owes close to 47 million birr in taxes, including amounts claimed by the Bishoftu municipality, electricity bills, and federal tax agency dues. The closure followed notices, frozen bank accounts, and a final notice issued 2 months ago, leading to the suspension of production. While Ahaduk's management expresses optimism about negotiations with tax authorities and a potential resumption of operations, uncertainty looms for the 372-strong workforce. Labor leaders have raised concerns about job insecurity, emphasizing the need for transparent communication and efforts to protect workers' rights. Ahaduk's struggles mirror broader issues in the manufacturing sector, including working capital constraints, limited forex access, and external shocks. The sector's contribution to gross domestic product has declined to 4.6%, and experts call for a comprehensive review and policy responses to address constraints and rescue the industry. A survey by Professor Alamayehu Geda, an economist at Addis Ababa University, identified insecurity, foreign exchange issues, political shocks, macroeconomic instability, and corruption as challenges leading to factory closures. Ethiopian authorities have launched a credit scheme through the Ethiopia Commodity Exchange Warehouse Receipt System to support edible oil manufacturers during the soybean harvesting season. The Ministry of Industry responded to appeals from soybean processors facing financial constraints, leading to a stakeholder meeting 2 months ago. The warehouse receipt system, previously available for maize, wheat, and malt barley, now includes soybeans, enabling the acquisition of loans from 7 registered commercial banks. Launched in 2011, it facilitates loans for farmers, unions, and processors by using commodities held in Ethiopia commodity exchange warehouses as collateral. Manufacturers began registering for the system last week during a stakeholder meeting on contract farming. Despite a decline in soybean prices, most processors struggle to gather sufficient working capital for necessary inputs. The oversupply of soybeans globally, coupled with a fall in international prices, has led to a price war between exporters and processors, affecting the industry. Farmers are impacted as the market faces challenges, with a significant drop in soybean prices, creating dilemmas for selling or taking loans for preservative chemicals. Economists suggest the need for a value-added supply chain to address a deeper market failure and consider the warehouse financing system a temporary relief. That's all for today. We'll be back with more updates next week. May good luck and fortune always be with you.